Hello everybody, dear friends and interested parties, clients and partners of Helaba, and those who otherwise have a special interest in capital markets and, in our case, specifically the covered bond markets, which is what this webcast is going to be all about. Hi, my name is Thomas Kors. I'm in charge of the FI and SSA department at Helaba, and within that brief also falls the business with covered bonds, very ably supported by our traders and research in particular, because I have two representatives of these departments here with me today. We're going to have Sabrina Mies, our head analyst for covered bonds, and Dirk Mohr, the head of trading for covered bonds, on stage with me in just a few minutes. Before they join, I'd like to just give you a little wrap up on my personal experiences over the last few decades with covered bonds and the amazing tour of success that that product has seen ever since I looked at it sometime in the early 90s. From the start of the jumbo market in Germany to the creation of super bonds by various German issuers in volumes of up to 5 billion, now to be spread throughout pretty much the whole developed world, it's been quite a ride. And the reason for the success here has been the constant access of issuers to covered bonds, or rather to finance via covered bonds, and the resilience of covered bonds in secondary markets in the face of severe crisis, at least when compared to other assets. Well, and crisis we did have quite a few. The last big one that we probably remember is the big crisis of 2007 to 2010. And now we have a much more unpleasant one, because this time we cannot blame banks. We have to blame a virus. We have the so-called corona pandemic with us. That has spoiled a few of the successes of covered bonds recently, but nothing to worry too much about, as our two experts will explain to us in a few minutes. And with that, I would like to welcome Sabrina Mies on stage. Sabrina, please join me here.
Hello, Thomas. How are you?
Great that you're here. Hi, I'm fine. We are going to look at a presentation that was mostly your brainchild, so it should be very easy to show us some details here. But I might ask you some questions in the running, so I hope you're patient with me. When we start with this, I did mention before to our audience that I thought covered bonds had a tremendous ride of success. The covered bond regulation that we've just received to help harmonize the diverse jurisdictional approaches we had in Europe, that's just one big sign. And new issue volumes have been rising most of the time. This paints a little bit of a different picture. Would you care to enlighten us a little bit about the backgrounds of that?
Sure. Well, covered bonds unfortunately had a very challenging year this year. As you can see, we had a drop of covered bond issuance to about 96 billion at the moment, while we had more than 140 billion last year. And why is that? Well, one, the unexpected pandemic, and on the other side, the unexpected and exceptional policy measures of the central banks, which, well, offered very cheap alternative refinancing operations to banks, and they took part in that. They decided to alter their refinancing plans and to issue much less of covered bonds into the capital markets, but then took the covered bonds that they issued as collateral and mobilized them to benefit from the very cheap refinancing operations, Sabrina, with the central banks.
We'll get into that in just a minute. What I'd like to ask you here, though, is if I look at these pillars, there is one obvious thing here. France doesn't seem to have, actually they seem to have issued more than they did last year. And we have a couple of other jurisdictions here that seem to continue strong. I mean, when I see APEC here, when I see North America, things come to mind that don't sound like normal covered bonds, i.e. South Korea, Japan. Would you like to tell us a little bit about that?
Sure.
Start with France, maybe.
Yeah, first of all, we need to know that until end of February, almost 40 billion had already been issued under normal circumstances. And then with the pandemic, we saw quite a rise on Canadian covered bonds coming to the market, while all the other European covered bond issuers seem to have disappeared. So we have had quite a couple of Canadian covered bond issuers in March. That was due to the fact that for Europe, we had already the announcement of the ECB with these long-term refinancing operations, so the very cheap alternative refinancing possibilities for banks. For Canada, this came a bit later, actually a week after they started issuing. The Bank of Canada announced that they now accept own used covered bonds. So and that was then the end of the covered bond issuers coming to the market. So there was a bit of a time delay. First, we saw a lot of Canadian issuers coming and benefiting from the very big demand still on the market and the little supply.
Sabrina, I'm a great fan of Canada, believe me. But I want to hear about France now.
Well, France, okay, France. France is a bit different animal, let's say. There were a lot of issuers that took part of the long-term refinancing operations, but also there were a lot of ones that didn't and came to the market, as you can see, like Carfil, and even came to the market with the social or green covered bonds. And so France, a lot of the very active issuers we saw, like Credit Agricole or Credit Mutuel during April, May. And I guess it was also a bit under the pressure of very large redemptions. And as I said, it's probably also because of their cover pools. I know we come to this later, having a lot of residential mortgages and not being probably able to draw on the TLTROs.
Is that, and what's the relevance in this respect for banks that are not part of TLTROs, like the South Koreans, the Singaporeans, Japanese, that all issued also this year?
Yeah, also we need to look at the time when they come. So Koreans came in summer. That was already after a few European issuers have come back, and spreads started to come down. So I think the Korean issuers took the opportunity to come to the market where there was still little supply, already a bit of supply back, but little supply. So they were able to benefit from the big demand in the market, lots of liquidity.
Yeah, I remember. They were very popular.
Yeah. So I remember the Kochman deal was oversubscribed hugely. I mean, that was also, I think, a sustainable deal, but still huge. And Singapore, we just saw now, I mean, they really observed the market, I think, quite deeply and waited for a good week to come because they didn't have any redemptions this year, so they weren't probably so much under pressure as well. And now, with investors like to diversify their portfolio, and I mean, Singaporean covered bonds benefit from very good creditworthiness. We don't need to forget.
I have a feeling the issuers, not only the Singaporeans, those in particular, but issuers in general can be relaxed. You mentioned the word, great. Investors, maybe a different story, but you mentioned the central bank operations here. Maybe we should have a look at this. Yeah,
just very shortly. So you see the probably retained covered bonds for 2020, which are much higher than those in 2019. And you see that especially in the Netherlands and Belgium, that's this part here, and also the German, Austrian ones took part of the possibility to mobilize covered bonds, to issue covered bonds, but not to the capital market, but to give them to the central bank and to benefit from this very, very good refinancing operations. I think this will go on. We have further drawings also in March. There's the last possibility to draw under the third TLTRO. We will see what the ECB is doing in December. So I guess the central bank measures will last for a bit longer and will influence and inhibit covered bond issuance.
So you think this is going to continue going up?
Well, it's probably not going up, but it will keep that level or only drop a little bit. It depends a bit on the conditions that the ECB will announce. If they decide to prolong the -1%, I think that's a great game player.
Okay. Well, you mentioned the TLTRO, so maybe we should look a little bit more in detail into this chart here.
Well, that's actually showing a bit the same of the volume that we just saw before. Here, that's the sum of all the drawings under the TLTRO, under these cheap refinancing operations. And the first possibility to repay for banks is in September next year. So you could think, or you could ask yourself, does that mean that they are repaying all the sums that they have drawn from the ECB and maybe convert this into covered bond issuance to the capital market? Very unlikely, I guess, but maybe a few, though.
Okay, so will be with us. Same as the coronavirus, I suppose, for quite a while at least. Speaking of which, covered bonds happen to have one thing that gives them their name. Cover pools, to be exact. You already referred to that in some of your statements. What we might expect in terms of effects on covered bond pools, on the quality, the value of the underlying assets. Maybe we should talk a little bit about that, because there are a lot of covered bonds, especially in other jurisdictions than Germany, that are actually covered by residential real estate assets. And how are they developing under the crisis? What should we expect going forward?
At the moment, we don't see any deterioration, let's say. So house prices, as you can see here, are all in very good shape. They are all in the positive environment, all with a plus, still increasing, maybe a bit slowing down. That's for sure. We also saw a slowdown of the demand for credit, for loans in the second quarter, obviously, this year, where we had the lockdowns in a lot of countries. So people didn't go to the bank to ask for a new loan. But then in the third quarter, we saw...
you mean the consumer loans or housing loans now?
Well, both, yeah, for private households. So in the third quarter, this took up, obviously. And we think that this will stabilize, and we will have a stable demand for mortgage loans again. And we definitely see that there is no break in house prices, and this is supporting definitely the very good growth.
Maybe one little piece of detail that I only just noticed, to be honest. I thought, well, it looks stable, but this is not the price level. This is the increases. So if this line is stable, it means prices are going up, right?
Correct. And to have a plus 7% or to have a plus 6% every year is quite tremendous. It's quite
I
amazing,
can tell.
actually.
I have a lot of friends looking for houses in Frankfurt right now, and they really complain.
Yeah, and that's the thing we have in a lot of countries in Europe. Huge demand, little building activity, and as long as this lasts, obviously we have a very good situation for...
Yeah, but that is definitely true also in my own experience for residential real estate, which is sort of the favorite cover pool for a lot of covered bonds. But what about commercial real estate, which happens to be also very popular as cover material for German covered bonds? Not only there, but there specifically. What do we expect in terms of the corona pandemic to be the effects on those cover pools and therefore on the resulting covered bonds? Anything?
Still tricky to say, I guess. I mean, what we can see, obviously, is that there is a pressure for hotels and retail properties, as you probably are not surprised. We need to wait a bit for numbers coming in, I guess, but that's definitely would definitely be a different picture concerning those property levels. If that hurts cover pools, I don't think so. We have very good enhancements here, like, you know, the LTV, and until such things feed into cover pools and LTVs and over-collateralization, this takes quite a lot of time.
I certainly haven't noticed any sort of weaker demand for covered bonds backed by commercial real estate when compared to covered bonds backed by residential real estate. Speaking of which, thank you very much, Sabrina.
You're welcome.
That was very helpful. I'd like to quickly just sum up what we have just heard. And basically, it's a nice thing to see that the positive side of the equation seems to look bigger than the negative side. The negative, yes, Sabrina mentioned potential loss of income due to the crisis, potential loss of consumer confidence, therefore fewer demand for loans, especially also for housing loans. But on the positive side, we have seen that the curves still point to price increases. Residential property seems to be fairly adverse to cyclical moves at the moment, especially in Germany. House prices appear to be largely robust, and we all expect the low interest rate environment to continue for the time being. Do we expect growth of home ownership? There seem to be more factors supporting that idea than not. So in general, I think it's a very positive picture for the primary markets. Let's see how the secondary markets look at that. And for that, I'd like to have Dirk on stage with me here. Dirk, why don't you join me?
Hello, Thomas.
Hi,
nice
Dirk.
to be here.
Good to see you.
Good to
you
see
know
you.
exactly what I'm going to do. You're a trader. I show you some trading. These are spreads that Sabrina has prepared in terms of the last few years when it comes to covered bonds. Why don't you give us a little bit more background to the development of these curves?
Yeah, if we look back this year, especially in January, we saw very stable covered bond spreads. We had already some COVID-19 news, but we saw the stable spreads till March, till beginning of March. And then as you can see here in the chart, we had a tremendous widening of covered bond spreads. For example, the German covered bonds widen 15 basis points, the French around 30 basis points, up to 40 basis points for Italy and Spain. And yeah, if you can see in the chart, the last spread widening in 2018, where we saw the beginning of tapering, we had much more or much higher spreads in this pandemic.
That to me looks like the perfect buying opportunity. So all of you out there who had the chance to invest, I hope you did. And don't sell them now, because if I look at these graphs here, it seems like the rally is going to continue.
But we haven't seen a lot of buyers, not in our client environment.
Except for one, right?
Because we had a liquidity crisis, and then the central banks and the governments stepped in with the liquidity programs, with fiscal programs, and we saw coming back, the trust comes back to the market, and we saw a lot of clients that come back. They buy, and we had nearly a V shape till the summer, and the spreads are now nearly the same than in January.
That's quite amazing. If you look at these programs, the original CBPP3 and now the popped up PEP share, that's a third of outstanding material in the euro covered bond markets. That's amazing. And if I look at that projection here, all again thanks to Sabrina, that looks like things are not going to get better when it comes to prices, or rather not prices, but spreads being further compressed, because just the back of the envelope calculation, we're looking here at an increase of roughly 8 to 10% in total in terms of the likely holdings of the central bank, compared to shrinking supply. That sounds to me like increasing prices, or rather much lower spreads even going further. So, as Ms. Lagarde is still here handing out notes, that should probably be 5 billion rather than 5 euros. Things look great for investors and issuers alike. So, thank you very much. But I have you here in a minute again. But for that moment, I'd like to have Sabrina one more time back. Thank you very much, Dirk. Because there's a little aspect of covered bonds. You alluded to it already in your first remarks, that we at Hellerbar put a lot of emphasis on nowadays, together with most of the rest of the developed world, and that is the ESG topic, i.e. the use of assets and the refinancing of assets in a sustainable way. You know, climate conditions are the biggest topic at the moment when you look to social media. And of course, ESG as an instrument to draw in the support of the financial system to help work against that is a big thing. And we are very much committed to developing this both for our own institution and for our clients. And of course, other issuers in particular have done that even a lot earlier than Hellerbar has. And that's where this chart comes from. Sabrina, can you give us a bit more insight into this?
Sure. Well, what we see here are the outstanding covered bonds. And in 2020, as you can see, we have reached 24 billion. That's, well, in reference to the whole amount, probably not a lot, but it's, as you can see, the trend is there. It's increasing. And my forecast for 2021 is at least the same increase as we had in 2020, which probably was also a bit limited due to the corona crisis, and bankers had to focus on other things than developing their programs, their green programs. Well, we have seen 11 euro benchmark sustainable covered bonds from all over the world. We have seen Korean covered bonds coming in the social and sustainable area. We had the first green covered bond from BPCE in France. Carfil extended and came with a COVID-19 social covered bond in April. So actually, that's also probably a trend. We will see much more social covered bonds, which we hadn't seen in the early years. We had more green covered bonds. And I guess this is a good story for the market. It attracts a lot of investors that we haven't seen. And I guess that's, that's supporting the demand side.
And when I look at the numbers here, between 2020, 24 billion, and our projection for 2021, almost 34. That's 10 billion net addition. Based on your own projection for covered bond supply next year, that's 10% of the overall market. Sounds very impressive. I hope we'll have a big share of that as an issuer, as an underwriter, as a distributor, as an investor. So in that respect, things are good here on the primary side as well. And you know what happens now? I say thank you very much, Sabrina.
You're welcome.
I need to have Dirk back on stage, please, Dirk, will you join me again?
Hello again.
You know exactly what the question is going to be, right?
Sure.
What about secondary markets in green bonds? Do they perform better than regular ones?
Yes. We see a huge demand of our clients for green bonds, for green covered bonds. And we built up a new Bloomberg page for better searching functions. And what we can see is that in terms of pricing, the green bonds are half a basis point, 1 basis point tighter than the normal curve. What else to say is that they are not...
but that's on primary, on new issues, or is that on trading?
No, on trading, on the secondary trading, yes. And there are not a lot of issues in this green bond format. So what we can see is it's very well placed, and it's not very liquid at the moment.
Well, I get a feeling that the SSA issuer universe steals the limelight on the green topic at the moment, because there are many more issuers with a lot of political support and a lot of volume coming to market right now. I mean, pioneers in this respect have been EIB and KfW, for example, but there are lots of others. But we hope some of that will rub off on covered bonds as well. We are very hopeful for the asset class, and we think ESG topics will be important for all financial products going forward. But that's a topic for another webcast. We're speaking about covered bonds here, and I'd like to just sum up what we have mentioned here so far. In general, I think the story is pretty good. Central bank policy will remain the most important driving factor. We have heard that both from Dirk, and we've heard it from Sabrina before. It will remain, it is already and will remain an important asset class. Dirk said, and I fully support that view, we will see many more issuers coming to market that are at the moment not active. Hopefully, we'll see more investors coming back to the market once the central bank recedes a little bit. But as long as they're active, hey, what the hell? There will still be a lot of turnover, and we'll see growth in the market. Continuing high demand is going to be a direct result by this little box here. Negative net supply, Sabrina pointed that out. We'll have more issues maturing than we have new issues coming to market. There's a direct link to prices and to spreads. The market will remain very receptive for new deals. And that, I think, is the best wrap-up we could possibly make for the asset class. My name is Thomas Kors. It was a pleasure to host this little webcast with Dirk and Sabrina on covered bonds. But I'll not just jump off stage without giving them a chance to make a final comment. Dirk and Sabrina, I would like you to sum up your views for 2021 and the asset class covered bonds, ideally in one sentence. And with that, I already say bye-bye.
Well, my view for 2021 is something that we shouldn't forget, and that's actually shown with the two feet here on the left side. Quality. Quality matters. Covered bonds are a asset class of high quality, and for me, if you ask me, quality will remain. Covered bonds are very well protected against, for example, deterioration of banks.
Thank you, Sabrina. I think the same. And what I can add is the idea of covered bonds will globalize. I think we will see more issuers in the next year, especially also in Germany. And I think the covered bond family will grow next year.
Great. Thank you very much, guys. You're a great team. Thanks a lot. Bye-bye.